Hello and welcome to another update video about Ethereum. A very exciting time here at the moment on the ETH chart. Generally with Ethereum, we have hit the target in this yellow area between $1,700 and $1,830. So at any point in time, we now need to be ready that it could come down. Obviously, we are currently at around $1,700. That means the market is still capable of, in this scenario, to move higher all the way up to 1830. So what does that mean? That means from a trading point of view, of course, you could start to take some profits. That's up to you. I, for example, took some profits earlier today, sold some of my ETH that I bought at just above $1,000 a few months ago. Took some profits of them, not everything, of course not, because we have no confirmed downtrend yet. But I do expect, with the highest likelihood, somewhere in here, the breakdown, which would then take us into the region between 1130 and 1330. So that is still expected. Don't know if it will happen now or a little bit later. So as I said, this wave can still go a bit higher. That is exactly the region where I have not, of that particular position, where I bought ETH. Yeah, I obviously didn't sell 100%. I sold half of it, allowing me to take more profits if we go higher, because I cannot rule this out. As you can see, we've really just only touched this target area for the wave B. So this is currently looking interesting. Could of course push higher. We take a look at that in a minute. First of all, where do we come from? What is the general view here? My view is still that we had here the wave 1, we had here the wave 2, we had here the wave 3, the wave 4 and the wave 5. So 5 waves up completes an impulse, a wave 1, which means that we from here expected the wave 2 to come down into this region. We're not there yet, but I think we're going to get there. This move that we can currently see to the upside is not an impulsive move in my opinion, so that confirms the view that what came down here was a wave A. This here is a corrective wave, could be a wave B. It might even be possible to count this as a WXY. It doesn't really make a great difference. It's a corrective wave, which would indicate that we will come down once more in a wave C. And if that plays out, the overall forecast would have worked out flawlessly. Of course, we had to readjust some waves here in this particular corrective wave, but that's what I told you already, that the wave B is going to be unpredictable, and that if you're not a skilled trader, it's best to stay away from that wave. And sometimes it's sometimes just best not to trade at all. There's no reason to trade every day. Wait for the high probability trades, of course, and not necessarily try to trade every wave, because some waves are unpredictable, like a wave B. Of course, it can be traded. And I told you, I think at some point down here, I remember that we said, okay, one way of trading a wave B would of course be to accumulate here. And then if it works out, depending on how high the wave B really goes, you could of course take some profits along the way. But that's one way of doing it. But within this wave is extremely tricky. So overall, that worked out overall. We did expect at a time a move up in a wave B. At times it looked like we would be coming down straight away. We still found support and kept support, and then had to reset here the wave C to the upside in the wave B. But what you need to understand is that we've now reached target, and it is important to understand that at any moment we could now come down. We can count 5 waves up here. As you can see, we talked about that earlier today, which means it could break down at any moment as well, because in this wave B that leads into this yellow area, you've got the subwaves A, B and C. The wave C is a 5-wave move, and you can count a 5-wave move. Now, what I don't know, and nobody will be able to tell you, if this 5th wave is going to subdivide into further waves. So it could just be that we've seen so far here the 5th wave already, but it could be that this is only the first wave of the 5th wave and we're going to cascade higher. This wouldn't be unusual. Therefore, the target area stretches out to 1830. Important to understand that we have just now reached we have just perfectly reached the 50% Fibonacci retracement level here at 17.25. I mean, yeah, I think we stopped $10 short, but that is the 50% Fib retracement. That is, for a wave B, an ideal level. Okay, so again, keep an eye on that level as well. Very important as well to understand that we are still in this ascending wedge where we had a fake out to the downside here, but it's an ascending wedge. It's generally considered a bearish pattern. If we see now that come down here, touch maybe support at 1648 and lose it, yeah, then we're also going to drop out of the ascending wedge. That would be a rather bearish pattern, could really confirm that we are going down already in the wave C, yeah, taking us into the area between 1130 and 1330. Another confirmation that we are coming down would be a break of the previous swing low, because if you're making lower lows and lower highs, you break a trend. So dropping below 1595 would be an indication that we are coming down straight away, and that would be further confirmed if we lose here the wave B low at 1495. Yeah, I think this is really a strong support level. If we lose this, I think we're going down. Yeah, I think we're going down. On the other hand, if you now see the price break above the wedge, retest it, and we could go higher, but this is not for me. I mean, I wouldn't go long here anymore. Yeah, the time to go long was at support. This is the time to start thinking about a potential short opportunity. Okay, so this is at least how I would play it, but I'm not sure if I'm gonna short yet. But as I said before, there is an opportunity to short here, and I would consider it if we see a first 1-2 setup, so making a lower high in a wave 2, and again, that would from an elite wave point of view mean that the wave 1 would be impulsive, the wave 2 would be corrective, and then we come down. Now what I could imagine, and that's just pure speculation at this stage, but that we come down now, are going to retest the support level and maybe the 50-day moving average in an impulse in the first wave, in a wave 1 of the wave C, and that we're going to come up in a making a lower high in a wave 2, and that would be a possible short entry point. Okay, just an idea. But of course, you know, if you break above the ascending wedge, that would be short term still another bullish signal, and we could move up all the way up to 1830. A wave B can also go higher, as you probably know, but this is just sort of the most ideal area for a wave for a wave B. Of course, we could go higher in a wave B. A wave B could even become an overshooting wave B, could go ridiculously high to $2,000, but it's just not the ideal level. It's just a bit too high. So we always can only play this market really by looking at probabilities. Now, a few more things I wanted to show you in this video. Maybe I'll make it a bit longer. Looking at the Bollinger Bands, but we go on to the daily time frame for that. Don't use Bollinger Bands very often, but they can be helpful, for example, in a wave B. You can see here with regards to the Bollinger Bands, I think it's hidden, that band. You might see it now if I make it a bit larger. Here we basically reached the upper band of the Bollinger Band, Bands on the daily. This is currently at 1725. That's exactly where the 50% Fib retracement level is. There's a key resistance level. So we've got the resistance, the trend line of the ascending wedge. We've got the 50% Fib retracement and the upper band of the Bollinger Band on the daily. So it's a lot of resistance. So that even indicates, you know, because we're here on the daily, it limits the possibility really to push much higher. Yeah, we have basically maxed out the Bollinger Band to the upside. Of course we could push higher, but it's just, again, likelihood reduces. So that's another reason why I took some profits earlier today. Some people might think I'm crazy to take some profits, but first of all, taking a 40% profit is not bad. You know, nobody got poorer from taking profits. Also, of course, that doesn't mean I took profits of my entire Ethereum position. I only took profits of that position that I added when I bought it at $1,000. So yeah, and also I took only 50% of that. What else can we use? The Bollinger Bands, ATR. No, I think that is what I wanted to show you with the Bollinger Bands. It's a key point, yeah. And on the daily, it's quite meaningful. Looking maybe at some of the indicators here, the RSI still has room to go higher, absolutely. And also on the daily here, the MACD can push higher. Therefore, we've got here the 1830 level still. You know, Ethereum has some more space to the upside. But what I want to communicate, we're getting sort of towards, you know, critical areas here. We also see now a slight bearish divergence on the 4-hour RSI as well, where we pushed higher here, but we made a lower high on the RSI. Also a bit of a warning signal that we might get close here to the end of that corrective wave to the upside. But of course we could push higher. What we need to do that in that case is to break above the ascending wedge, and then we can max out basically that area here. But keep in mind that we are maxing out currently the Bollinger Band to the upside, and that limits your potential to go higher quickly. Okay, and that's my update about Ethereum. So hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.